Distinguished panelists, ladies and gentlemen, distinguished delegates, dear colleagues, a warm welcome to all of you. My name is Elisabeth Türk and I am the director of UNECE's Economic Cooperation and Trade Division. And it's my great pleasure to moderate this webinar on the theme, Recent Trends in Trade and Investment in Transition Economies, COVID-19 Implications for Value Chains. I would like to extend our immense gratitude to the Geneva Trade Platform for joining hands with UNECE to make this event a reality. At UNECE's Economic Cooperation and Trade Division, we have recently partnered with the Geneva Trade Platform for a series of events. Last Tuesday, we co-hosted the event Promoting Circularity in Transition Economies, the role of trade and economic cooperation as part of the World Circular Economy Forum. And earlier this year in September, we benefited from the role of the Geneva Trade Platform in the context of the Geneva Trade Week. At that point, we partnered with the WTO Accession Division on an event called Harnessing Trade as a Means for Strengthening Agenda 2030, the case of WTO accession. It's important to note here that these events are purely informal webinars aimed at outreach and engagement with stakeholders, particularly those in UNECE's 17 beneficiary countries. These are countries in Central Asia, Southern Caucasus, Western Balkan, and Eastern Europe. In essence, these events are not part of UNECE's intergovernmental machinery, but of course, they are substantively related to our official meeting agenda. Before we go into the substance, and today we have a lot of interesting substance to discuss, let me start with a few practical housekeeping remarks. First of all, I'm very pleased that we are able to provide English-Russian interpretation. To access it, 3 steps. Please download the Interactio app or access the web app from your browser. Please enter the event code, TRADE20, and please select the appropriate English or Russian channel. You can find these instructions in the chat box. The team has already posted it. Second, some information on the setup of our virtual platform and a few reminders to our speakers on the functionality of the platform. First, please note that the audience is muted and cannot be seen. Second, and that's important for our distinguished speakers and panelists, you are all unmuted by the system, therefore, please mute yourself if you're not speaking to avoid any background noise, and unmute yourself if you are speaking. Please share your screen if you plan to project slides during your presentation, and the GTP's team stands ready at your service if you're facing any challenges. Lastly, a reminder that this session is being recorded and will be made available to the public afterwards. Before proceeding, let us kickstart the session with an icebreaker. For this, we will be using a software called Mentimeter. As mentioned before, unfortunately, we do not see the audience. That's why we would like to use this Mentimeter to engage our audience. The team under the GTP guidance has prepared a few questions for our audience, 5 questions if I'm not mistaken, and we will launch these questions throughout the session. To answer our questions, please go to menti.com. You can use different electronic devices, your iPhone, your tablet, your computer. And once you are at menti.com, you insert the code. You can see that now displayed on the screen. And you type your response to our questions. Please be assured that none of your answers can be attributed to you. To start with, let me ask you, distinguished audience, what country are you joining us from? We'll get back to the Mentimeter throughout the session, and to see your feedback, it's going to be very useful to hear and to know who is joining us from where. Ladies and gentlemen, as we all know, the COVID-19 pandemic brought a number of challenges to the global economy. Trade has been severely disrupted by shocks. Amongst others, the COVID-19 crisis has had a major impact on the supply of medical products and other essential goods and services. Foreign direct investment, essential for facilitating trade, economic growth, and the pursuit of the Sustainable Development Goals, plummeted globally. These disruptions have also had significant implications on the way how global and regional value chains operate. Transition economies, including those which are the least integrated into the global economy, were significantly affected. So today we are honored to have with us distinguished speakers from UNCTAD, WTO, and the Higher School of Economics in Moscow, who will share with us recent COVID-19 induced trends in trade and investment flows and in global value chains operations. Our distinguished speakers will outline global trends and will provide insights into recent developments in transition economies in the UNECE region. They will put a particular focus on countries in Central Asia, Southern Caucasus, Western Balkan and Eastern Europe, and also the Russian Federation. We are also delighted to have two commentators from countries in Central Asia, Kazakhstan and Kyrgyzstan. We will hear from them about their thoughts for the way forward for resilient, diversified, and sustainable economic recovery post-COVID-19. With these remarks, let me introduce to you our distinguished speakers. First, our three speakers. We are delighted to have with us here today Mr. Richard Bolvin, Head Investment Research Branch, Division on Investment and Enterprise, UNCTAD. Mr. Coleman Nee, Senior Economist, Economic Research and Statistics Division, WTO. And Mr. Maxim Medvedkov, Head, Department of Trade Policy, Higher School of Economics, Moscow. After their presentations, we will move to our discussion segment, where we'll have two interventions from our commentators, who will share with us national and regional perspectives. We are delighted to welcome as commentators Ms. Gulmira Kuzhagalieva, Senior Expert, Quaz Trade Center for Trade Policy Development, Kazakhstan, and Ms. Ayesilu Mametkazieva, International Trade Consultant and Fellow, Asian Trade Center. We will first turn to our speakers and then to our commentators. And in between, we will look at the Mentimeter to see what our audience have to say. If we have some time left, we might take a few questions towards the end of this segment. I therefore invite the audience, including those joining us from capitals, to pose their questions in the Q&A box. Feel free to pose your questions directly. Should you wish to do so, please also do it in Russian. Before moving to our speakers, let us look at the response to our first Mentimeter question. What country are you joining us from? And we can see here that clearly Switzerland is the host or the location of many for us. But we also see we have significant audience from Belarus, the Russian Federation and Russia, Pakistan, Belgium, the Kyrgyz Republic, France. We also have further Central Asian countries, Uzbekistan, Turkmenistan, and a few EU member states, as well as somebody joining us from as far as India. So I guess it's useful for our speakers to see who is with us in the audience. And with this, let me turn now to our first part of this event and to our presentations. Without further ado, let me give the floor to Mr. Richard Bolvin. Mr. Bolvin is the head of the Investment Research Branch in the Division on Investment and Enterprise in UNCTAD. He is a central figure behind UNCTAD's annual flagship World Investment Report, as well as a range of other publications in the investment and enterprise division. Among others, Richard was the lead author of several WIR theme chapters on global value chains, international tax, corporate nationality, the digital economy, and special economic zones. Relevant for our event here today, each year the overviews of UNCTAD's World Investment Report are also available in Russian language. Richard, it's great to have you with us. The floor is yours. We said 10 to 15 minutes with a preference for 10 or 12 minutes. Thank you very much, and please go ahead.
Thank you, Elizabeth, for the kind introduction and for the opportunity to participate in this event. Let me get straight into the discussion item and share my screen with you. There you go. So I'll be speaking this morning, trying to stick to about 12 minutes on FDI trends globally, and with a focus on transition economies, and in particular about the implications of the COVID-19 crisis on investment and trade trends and on global value chains. This is the projection for global FDI flows that we made in our World Investment Report this year. As you know, our World Investment Report comes out in June, and at the time we projected a negative impact of about 40% on FDI of the COVID-19 crisis. Contrary to what happened in other parts of the global economy, for example, GDP projections, trade projections, which in the second half of the year turned out milder than the earlier projections in the year. With FDI, that's unfortunately not the case. We looked at the numbers for the first half of this year, and they were almost 50% down. And we have some numbers that I will show you in a moment on components of FDI for 3/4 of this year, and we are sticking to our earlier projection of a fall in global FDI flows of between 30 and 40%. And what is important here is that that's not just an immediate impact this year on global investment trends, but it will go into next year. We do not actually expect a recovery of foreign direct investment until 2022. What are some of the reasons for that? So here's a quick overview of some of the key mechanisms through which the COVID-19 crisis is affecting global investment trends. Of course, the first there, and a very immediate and short-term implication, is the simple implication of the lockdowns and the impossibility for firms to go ahead with the implementation of investment projects. That was a serious effect that we saw right away in the first months of this year, starting in China, which already in the first quarter had minus 25% of capital formation in the productive sector as a result of their lockdown, and it immediately worked out in very similar ways across other economies in the world. Unfortunately, now we are in a second wave in many countries, including most of the countries that I just saw on your Menti screen. And so this lockdown effect may come back to hit us for a second time. But there are also other indirect effects of the crisis on investment. Of course, one is the lack of earnings this year in many firms that are active in international investment, and reinvested earnings are a very significant component of FDI, including in Russia, where it is the major part of FDI inflows. And of course, Russia accounts for the majority of investment in the overall transition economies region. There are other effects, some of them policy driven. There have been many new investment restrictions put in place, especially in some OECD countries, which will hinder investment flows. The longer term impact of the recession will be causing next year's flows to still be very, very hesitant, and that is because simply normally the effect of an economic recession on investment comes in with a lag. So the effect this year is the result of the lockdowns and immediate crisis effects, but the economic recession effects will only really hit us next year. And the last one is, of course, the focus on restructuring of international production systems, especially for critical supply chains. And I will be speaking about that in a second when I'm talking about our expectations for the coming years on international production, and that will drive trade and investment trends in the transition economies region. This is a picture from our Global Investment Trends Monitor from October, and I just presented to you some of our expectations in the first half of the year, and this is some real data from the first half of the year on FDI. I mentioned already the near 50% drop in the first half, but here's also some real data on what are basically the main elements that drive investment, global investment flows. One of them being cross-border mergers and acquisitions, and the others being greenfield projects, so new projects and project expansions by cross-border investors, and international project finance, which are very large-scale projects that require multiple investors and debt, usually in infrastructure, but also natural resources, agriculture, and public services sectors. And you see here the significant drops that we have in each of these types of investment in real data in 2020. And in reality, the transition economies are among the worst affected, right? This is a summary. You see the same numbers on top here as in the previous slide. So minus 37%, for example, for greenfield investment projects for the worldwide average. And transition economies have a number there of minus 58% this year compared to last year. Of course, some of these impacts that are looking worse in transition economies compared to the rest of the world are the result of the fact that these flows are generally relatively small in transition economies, and therefore, and as a result, relatively volatile. At the same time, there is also some structural reasons underpinning this big impact of COVID. One of them, of course, being the resource dependency of investment flows in many transition economies. The drop in oil prices and mineral prices and other commodities this year has also affected investment flows. The GVC dependency of some investment flows in the region is another factor, right? So the worst affected sectors worldwide in terms of investment have been natural resources, GVC dependent investment flows, and tourism and travel related investment flows, obviously. The first two of those, so resource dependent and GVC dependent flows, are quite important for some transition economies. So that's why the impact this year already is quite severe. But this is just what is happening in 2020. And in reality, this COVID-19 impact on investment trends in 2020 is really following a slowdown that was already there over the last decade. What you see in this picture here is 3 decades of history of global value chain and investment trends. And this is a picture from our World Investment Report of this year. And what you can really see is that already after the global financial crisis 10 years ago, the growth in GVCs and the growth in FDI did not really go back to its levels before in the 1990s and 2000s. What you see on top there is that we had growth in global FDI flows of about 15% in the 1990s, still 8% annually in the 2000s, and only less than 1% per year in the 2010s. So this is really, we were already in sort of a GVC and FDI stagnation decade, and now global value chains and investment, cross-border investment, have to digest this major crisis that we're seeing this year. So that has important implications for what we see happening over the next decade. But the next decade, well, the 2020s, will not just be driven by this, by COVID-19, obviously. There were some global megatrends in act already before, and they are basically going to be responsible for what we have termed a transformation of international production that will really shift patterns in investment and trade, including in the transition economies region. Here are the three megatrends that we normally consider most important affecting international production. The first one, technology, the new industrial revolution, and the advanced robotics and artificial intelligence, the digitalization in the supply chain, additive manufacturing. These will really change global supply chains. They are generally considered to decrease the importance of labor costs in many value chains, and as a result, the driver for firms to locate overseas looking for lower cost human resources. So that will shift the type of investment that we see in global value chain dependent sectors like automotive and electronics, which are quite important in some of the transition economies. Policy and economic governance at the global level, of course, we're all familiar with what's happening here. In the last few years, we've seen much more a return of protectionism in trade and investment, and a decrease in the importance of multilateral processes, shifting towards more regional and bilateral processes. And of course, already since the global financial crisis over the last decade, interventionism in national economic policymaking is far more important. And the last one here mentioned is sustainability. And this has enormous implications for global supply chains, not just because of the changing and shifting behavior of multinational enterprises trying to comply with sustainability standards, but also because simply sustainability policies and regulations are not uniform around the world. And simply the fact that there are differences between countries in rules and regulations being established, that drives different motivations for firms and different incentives for firms to locate across and to locate their supply chains across borders. Now, looking at these three trends and adding to that COVID-19, in our World Investment Report, we called it kind of the perfect storm. COVID-19 arrives on top of these already pre-existing megatrends. And what we see for the next 10 years is a shift in international production along four main lines. So these lines are here on top. I've just summarized them with one word: reshoring, diversification, regionalization, and replication. With reshoring, people are familiar with that. Some of the major economies in the world are looking to bring back home some manufacturing capacity. Diversification is more about firms trying to reduce their vulnerability to global supply chain shocks, which were already expected because of climate change and increasing numbers of natural disasters that have affected global supply chains already over the past 15 years or so. And now, of course, COVID-19 is a major driver of this trend. Regionalization is a shift from global efficiency-seeking investment to more regional market-seeking investment. And replication is distributed manufacturing, meaning a shift from very large-scale industrial investment, which every country in the world is so keen to attract because it generates a lot of value added and employment, towards much more smaller-scale manufacturing type investments. And what you see in this slide, just try to summarize in one slide the scenarios that we have depicted in the World Investment Report. And it really shows a huge differentiation of these different trajectories over a series of industries. You see on top there extractive industries, but also agriculture and agro-based processing industries, which are very much affected by the expected trajectory towards regionalization. So much more dependent on regional market-seeking investment, and an expected increase in the importance of regional trade flows and regional investment flows. That's important for the region because if I look at the investment profile in the region right now, it is about 2/3 in natural resources, and agriculture and agro-food processing manufacturing. So this is a very important part of the investment profile right now. The same thing we see there, a little bit lower. You see there the regional processing industries, again, very much more driven by the regionalization trajectory that I just talked about. So those are the main industries that are important to the region. Of course, there's a series of other ones as well. The 1/3 of remaining investment in the region is mostly in GVC intensive industries such as automotive manufacturing, and which will be more affected by the diversification trajectory and which will become more technology dependent, with what, as we see, an increasing importance of intangibles, and therefore the risk of increasing difficulty in capturing value added in the global value chains that these investments are part of. So what implications does that have for policymakers in the region? So here's a very high level overview of some of the main challenges and opportunities that we see for policymakers as a result of the transformation processes over the coming 10 years, right? So the first one is simply the fact that we see a lot of restructuring in international production configurations. So divestment, relocations, and investment diversion, but at the same time, an opportunity to attract investment in industries where investors are looking to diversify supply chains. And we have coined the new term resilience-seeking investment. So this is an opportunity for investment promotion agencies, investment authorities in the region to try and shift the strategy for investment promotion and facilitation towards a new sector. In general, the most important impact that we see and the most important challenge is simply the shrinking pool of global efficiency-seeking investment. So much tougher competition for FDI. At the same time, as I mentioned already, that is balanced at least partly by the increasing opportunity to attract local and regional market-seeking FDI. Value capture will become more important, more difficult in global value chains because of the growing importance of intangibles. At the same time, we see a shrinking or a shortening of value chains and therefore more investment in final goods production, i.e. broader industrial capacity building opportunities. And the last one is a really important one for the region, which is that the type of infrastructure that has been built over the last 10, 15 years in infrastructure built over the last decade for global value chains will really need to change towards platforms that enable smaller scale manufacturing, much leaner type platforms to attract investment in distributed manufacturing and in regional market-seeking investment. And so we're going from what we call big infrastructure in big special economic zones that have all the facilities and all the sophisticated amenities for global investors to the type of economic zones, for example, to attract investment in services and to attract investment in small-scale manufacturing, which can be much more low cost. But those diminishing returns on infrastructure built for a world of GVCs is very important for the region, because what you see here is one of the main strategies adopted, as we see it in the region, to attract foreign direct investment over the last few years has been the buildup of very large special economic zones. As you see here, we had our World Investment Report 2 years ago on global trends in free zones, special economic zones. And we did that because around the world, there's been quite an increase in the last 10 years in the use of industrial policies and hence in the use of special economic zones to attract investment and to promote trade. And the transition economies have been among the most active in doing this. As you see here, the vast majority of zones in the region now have been established over the past 5 years alone. Some of those have been quite successful. There's been one of the zones in Belarus that was awarded the most successful zone by the EU, by the economic, the EIU, the intelligence agency of the unit of the Economist. So they even, some of these zones have been very successful and have been receiving rewards. At the same time, they are the typical example of large-scale infrastructure built for a world of growing global value chains. And with the shrinking pool of efficiency-seeking investment we see over the coming 10 years, this may be a strategy that really needs very close attention, and where especially the return on investment has to be monitored very, very closely. Some of these zones have been quite innovative, going beyond global value chain dependent types of investment. There are services zones in the region, there are even tourism zones in the regions, but those will also be very negatively affected by COVID, obviously. There are also quite a few novel agricultural zones and agro-processing zones that are important to attract investment and generate trade in the region. All of them, however, very severely affected by COVID, by border closings, especially when they are in landlocked economies, in transition economies, very heavily affected by COVID and very heavily affected by the trajectories we've projected for the coming 10 years. Let me conclude with that, with just a little preview here of our latest publication that is just coming out today, which is the SDG Investment Trends Monitor. I would refer you to our website to look that up later today. And these are the trends that we are projecting this year for investment in what we call SDG sectors, which means those sectors of the economy that are most relevant for the achievement of the Sustainable Development Goals. As you know, we have 10 years left to achieve those, and they require a lot of investment in infrastructure, renewable energy, water and sanitation, food and agriculture, health and education. And these are some of the trends that we're seeing. Much of this is project finance, and as you saw in the region, project finance, international project finance in the transition economies is at the moment very, very small and very heavily negatively affected by the crisis. The investment in food and agriculture in particular has been very hard hit by the crisis and by the problems in global supply chains. So I think that the policy attention over the coming years really has to go to these sectors and to promoting international project finance in some of these public services sectors, which is going to be especially important because of the shift away from attracting just investment in global value chains and needing to promote investment in these type of sectors that are particularly important for services and the achievement of the Sustainable Development Goals. With that, I conclude. Thank you very much.
Many thanks, Richard, for this very rich and comprehensive overview. Having worked on the policy part of the WIR for several years, it's very, very nice for me to see the WIR slides again.
I'm sorry to interrupt, but I'm having a problem with my computer. My battery power is almost dead and it's not taking a charge. Could you move to the next speaker first, and I will attempt to connect through my other computer.
All good. Thank you. Thank you, Michael.
I only have 7% left.
Not to worry. So we always have this like IT challenges, but I guess we get better every week in addressing them. Let's recap briefly what we heard from UNCTAD, and I think it was a very rich presentation in terms of giving us an overview where we are in terms of FDI flows, what happened this year, what are the expectations for the future globally and for the region. You also gave us some insights into what could be possible reasons for that, and you placed all of this nicely into the bigger picture in terms of what has happened over time, where this trend is coming from, and very importantly, the three megatrends, amongst which sustainability is one. So that's very interesting to hear. Richard, it was also great to hear about the sectors and which sectors are very important for economic cooperation and in the region. You mentioned natural resources, agriculture, and agri-food. And you nicely pointed to the challenges and opportunities for policymakers, what policymakers really have to look out for in the future. And their special economic zones are definitely one entry point, and that move from big infrastructure investment to smaller scale based services-based investment. So all of this is very, very rich information, and we surely will come back to this as both part of our Mentimeter and part of our commentators. Let us now move to our next speaker. I'm very pleased to introduce here Mr. Coleman Nee, Coleman Nee is senior economist in the Economic Research and Statistics Division of the World Trade Organization. Mr. Nee is responsible for producing the WTO's trade forecast and the composited trade indicators, and that includes the Goods Trade Barometer and the Services Trade Barometer. Mr. Nee also contributes to several WTO publications, including the World Trade Report and the World Trade Statistical Review. Coleman, let's hope that technology is with us. The floor is yours. It's great to have you. And again, we try to shoot for 12 to 15 with a preference for 12 minutes. Let's see how we will be doing in this regard. The floor is yours.
My apologies, Elizabeth. I think we'll go on with Maxim because we still don't have Mr. Coleman Nee online.
Okay, so we
Hello,
lost.
I'm connected here, but I don't know if I can share my video. If you could move on to the next person, I will try to connect.
Okay, as we will try to get back Coleman, let us move to our third speaker. And we are equally pleased, very, very delighted to have with us Mr. Maxim Medvedkov. Mr. Maxim Medvedkov is the head of trade policy and the chair and professor at the Higher School of Economics in Moscow. That's one of the leading universities in Russia, including in the area of international trade. Between 2001 and 2019, Mr. Medvedkov was also Russia's chief negotiator at the WTO. He's the person who contributed to the accession of the Russian Federation to the WTO in 2012. Mr. Medvedkov, Maxim, we are honored and delighted to have you with us. Let's hope the technology works. I can see you already, so that's a good sign. Maxim, please go ahead. The floor is yours.
Thank you very much, dear colleagues. It's my real pleasure to share with you some ideas in respect of what happened in our Eurasian region and in Russia because of the COVID pandemic, and what we may expect in trade and economic terms in the nearest future. First, I will start shortly describing situation in the region. I think that pandemic affected economies of the region absolutely in the same way as in other parts of Europe and of the world. So we suffered from weakening domestic consumption, from reduced export revenues, from disruption of global value chains, but at the same time we have had other problems, and as these other problems were connected with a severe limitation of movement of people. In particular, because of that, in Russia, a lot of construction projects was frozen, since most of the projects are developed together with a labor force from other countries of the region, and in turn, this labor and the profits or transfers from that labor contributes to substantial part of GDP of that countries. For example, in case of Uzbekistan, it's about 13% of the GDP. In case of Tajikistan, about 30% is due to transfers of labor which is working in Russia. What Russia is doing now, facing this problem, and since we still have border closed, the government is now discussing different ways on how to allow to labor from that countries to come back to Russia, to Russian construction plants, and to restart working there through specific green channels. This is not yet formalized, but again, what I have heard from the press, the next weeks we may solve this issue, and it will be a very practical solution for those who are involved in that problem. In terms of Russia itself, because of pandemic, we lost 25 working days this year. In terms of money, that resulted in about 14 billion US, so about 500 million US per day that were losses because of non-working days, additional non-working days because of pandemic restrictions. It's a huge money. And that's why the government was forced to start assistance program in respect of industries affected. These industries were divided in three groups. One, industries which were completely closed, and it's about 10% of gross value added. That's catering, hotels, tourism, non-food retail, passenger air transportation, few others. A second group of industries which was partially closed, it's about 46% of gross value added, and that's part of manufacturing, construction, professional services, logistics, storage. And the third group included industries that continued to operate during the lockdown, and with 44% of gross value added. This included agriculture, mining, electricity, water supplies, of course, production of pharmaceuticals and healthcare. So the government granted to that industries respective assistance within the governmental plan, which substantially helped to stabilize situation in Russia's economy. What we have now in Russia, what the business is thinking, the expectations are, I would say, a little bit positive. People believe, businessmen believe that things are steadily improving, and results of review, there was about 1,000 companies asked by Russian media in that respect, what they expect from further development. 44% of companies in Russia reported they had already closed the third quarter of the year with a profit, which is certainly better as compared with the previous quarter, second quarter, where only 12% have closed the quarter with the profits. And the share of companies that close the quarter with losses decreased from 28% to 22%. So we may expect that despite continuation of pandemic measures, the situation in the economy will stabilize. However, the most commentators believe that Russia will need about 2 to 3 years in order to come back to a real stable figures. On global value chains, I will give you some examples of what happened in most of the industries which are involved in the chains, first starting with automobile industry. About 40% of all Russian suppliers are focused on China, and because of pandemic, the major companies in Russia reported problems with sourcing those necessary spare parts from China and also from European countries, from other countries. So what they said recently that all of them are looking to change sources of supply and to investigate new possibilities domestically or in the region. In the region means Eurasian region, region of Eurasian Economic Community, in order to make the supplies more stable. Another interesting feature for automobile sector is a situation with Afterwards, it's a producer of, say, real Russian cars. It's a company which for many years produces Lada cars. They have reduced production by 7% because of pandemic, but it's substantially lesser than as compared with other producers in operating in Russia with participation foreign investments, where foreign supplies are much more important as compared with afterwards. And afterwards seems to be one of the few automobile companies which will finish this year with a small profit. And the commentators also say that it's probably because it's not connected so with importation. In pharma industry, basically the situation was more or less the same as in automobile. About 70% in terms of value of pharma produced in Russia is imported, 70%, because of problems with supplies from India, from China, from other destinations. Companies were forced to look for alternatives, which was rather difficult to do. It was recognized that, unfortunately, localization program, which Russia implemented for 7 years, recent 7 years, were not successful. That's why the pharma industry wants to invest in the near future a lot in order to develop alternative supplies from the country or again from Eurasian Economic Union. Clear winners in pandemic are railways, Russian railways, specifically transit roads won. So many companies have changed their modalities, and they declared railway as a major transport supply chain between China and Europe. So, and currently, Russian Railway considers different plans how to increase its transit ability in order to participate more actively in this transportation supply chain between China and Europe. Agriculture, despite several problems, data on agriculture industry are generally positive, and agriculture has is a very important sector in the region and in Russia. Certainly, because of pandemic, many consumers of agriculture products were unable to consume what they planned to do. However, generally, our companies report that the impact on agriculture of COVID was not much, and production remains stable, and investments are also as expected. Companies invest more and more in production and also into retail. And finally, on tourism, tourism was and still is a sector which lost huge money, about 1.5 trillion rubles. You make divided by 65, 70, and you will get a sum in US dollars. It's about 1.6 million workers, Russian citizens, which are involved in the sector. And currently, this sector have a big discussion on what to do next. There are some plans, but certainly everything depends on what will happen with the travel restrictions and with this pandemic itself. And finally, I would like to I would like to give you some conclusions from our observations. What we may expect in the next months and years because of pandemic. First, we think that those industries that were significantly affected by pandemic crisis because of increased demand, for example, like pharma or personal protective equipment producers, will be investing in localization of production, and they will increase the chain control, searching for suppliers at arm's length. Secondly, we think that involvement of regional partners, specifically within the customs union, within Eurasian Economic Union, can serve as an important source for Russian companies to diversify their suppliers. Thirdly, we think that traditional approaches to trade policy very probably will be adjusted. So free trade agreements may not be always the best instruments to control and to increase trade. Currently, decisions of authorities involved in anti-pandemic restrictions do matter substantially more than level of import duties or other non-tariff barriers. But there is no universal approach in respect of such restrictions, and we do not have a stable source of information about what restriction is in force where, and respectively that has a big negative influence on not only on travel but generally on international trade and international economic activity. So we still think that it could be a good idea to explore a possibility of a kind of transparency exercise of an electronic platform which may provide to all companies or citizens which are interested information about current restrictions because of pandemic. So we don't think it will cost a lot, but certainly it may help to economic operators and to citizens to plan their activities in more realistic way. That's what I wanted to share with you, colleagues. Thank you.
Mr. Medvedkov, Maxim, many thanks for that also very rich presentation and for stepping in so fast in our logistical challenge. You've already dived perfectly into the regional and country-specific dimension of our event. You've shed some light on what is happening in the Russian Federation and in the region. You've flagged the importance of the construction sector and the challenges surrounding labor force and migration issues here. You have talked to us about the assistance that is being offered for different sectors, closed sectors, partially closed sectors, and those sectors that remained open in one way or the other. You've given us a little bit a positive picture for the future, saying that between 2 to 3 years, the economy would be back on track. And for GVCs, you nicely listed some of the key sectors. Automotive, facing challenges with the supply chains, pharmaceutical industry, railway, one of the clear winners you mentioned, agriculture as a very important sector, and tourism, obviously one significantly affected. And last but not least, in your conclusions, you pointed to the possibility or the need to adjust trade policy approaches traditionally as they have been undertaken before. Thank you for that, Maxim. That was very, very helpful and interesting. Let us now see whether we can connect to Coleman Nee from the WTO. Yes. I heard there might be still some challenges. We will be able to see your slides, but maybe not you. Coleman, please go ahead and try to share your slides.
Yes, thank you very much for your patience, and I apologize for the technical difficulties, but that's the story of the pandemic, and we all have to improvise. I will just share my slides right now. I'm sharing the screen. Can you see that?
Perfect. I can see it still with sort of the parts of your desktop, but that's fine. Perfect now. Please go ahead.
Slideshow view.
Yeah.
Thank you very much again. And I'd just like to share with you, I'll try to be brief, the WTO's most recent trade forecasts, trade indicators, some statistics, and our recent monitoring report to illustrate the trade impact of the COVID pandemic and the prospects going forward. Second, I would like to share with you some indicators related to GVCs, particularly as they relate to transition economies. And third, I'd like to discuss how cooperation on trade can help countries engineer a robust recovery from the pandemic and bounce back quickly. Just start right here. The WTO in October released its most recent forecast for world trade in 2020 and 2021. We predicted a 9.2% decline in the volume of world merchandise trade for the current year, followed by a 7.2% rebound in 2021. Most regions, all regions suffered sharp declines, are expected to suffer sharp declines in 2020, but some regions have declined more than others. Most notably, North America exports are expected to decline by nearly 15%, and Europe around 12%. Yeah, this was the estimates as of October, before there was news of treatment for COVID-19. But the exception to this is Asia, which has suffered relatively small declines in trade on both the export and import sides. Our regions do not include transition economies per se, but we have an aggregate region called Other Regions, which includes Africa, Middle East, and most of the transition economies. And this showed a 9.5% decline in the volume of merchandise trade in 2020 in merchandise exports, followed by a 6.1% recovery in 2021. The decline on the import side was expected to be larger in 2020 at 16%, with a relatively modest recovery of 5.6% in the coming year. Now, once again, this is based on information at the time that the forecast came out. We considered that the forecast had a lot of uncertainty associated with it. As a result, we generated some alternative scenarios for trade, which is shown in the left panel. Our projection expected a rather sharp rebound in trade in the third quarter of 2020, which seems to have come to pass, and a slowing pace of trade expansion in the fourth quarter. At the time, we assumed that if there was a sharp resurgence in COVID-19, we might end up in the more pessimistic scenario, which could reduce world trade by up to 4 percentage points. On the other hand, if there was an effective vaccine that was widely disseminated, we expected the possibility of stronger growth in the coming year, stronger trade growth, which would add about up to 3 percentage points to trade growth in 2021. At the moment, we are faced with something in between those two. We have a resurgence and effective treatments on the horizon. So which of those outweighs the other will remain to be seen. What's interesting about the pandemic is that it's been quite different from similar in some respects, but different in others to the financial crisis of 2008 and 2009. The trade decline for the year is expected to be smaller than the financial crisis in 2009, but the depth of the trade decline from peak to trough is roughly comparable. What is different is that we've seen a faster recovery in trade, partly enabled by technology that has allowed people to continue to work remotely and sustained demand for certain categories of goods that are seen to be necessities or related to medical treatment. So for example, we saw a 53% decline year on year in the value of merchandise trade and automotive products in the second quarter. In the third quarter, we've seen a recovery, a substantial recovery, but trade remains below its level of a year ago. It's down 13%. Other manufactured goods also showed significant declines and subsequent recoveries, but only partial recovery. On the other hand, electronics and computers they've shown positive growth through the crisis. In the second quarter, they were 3% up year on year, and in the third quarter, 11% up. Part of this is to facilitate working from home. People have invested in electronics, and unfortunately, mine failed. But at the same time, we also saw strong growth in textiles, which are actually, this category contains surgical masks, which have been, demand for which has been incredibly strong during the crisis. Although our expected decline for world trade in 2020 is less than we originally feared earlier in the year, the decline in services trade has actually been stronger. Services trade is down around 28%, or was down around 28% from year on year at the bottom of the pandemic, and has only started to recover partly. As of September, it was still down 17% year on year in US dollar terms. Let's move on. So in response to this kind of shock to the global economy, there was some concern that countries would impose significant trade measures, and there were export restrictions in certain classes of goods like medicines and staple food products. But our most recent WTO monitoring reports, which track trade restrictions imposed in the last few years, showed the number of new measures and the coverage of trade has fallen in the most recent report compared to the previous one. It suggests that countries are anxious to access international markets to obtain these important goods, and these have allowed countries around the world to take advantage of medicines and other products. So the rise in restrictions on trade is not as severe as originally feared. Now, moving on to intermediate goods and as an indicator of global value chains, just to see what is happening on a more timely basis. At the global level, we've seen remarkable stability in the share of intermediate goods in world trade. If we consider this as an indicator of global value chains, despite the financial crisis in 2009 and the trade slowdown in 2016 and the current pandemic, we see a remarkable stability in the share of intermediates in world trade. This suggests that global value chains are not retrenching, but they may have plateaued. They really grew substantially in the 90s and early 2000s, but at the moment, it seems that these sorts of efficiencies gained by countries like China and Russia and India joining the international economy have been captured, and we might not expect a retrenchment, but probably not a return to the growth of global value chains. Now, for the transition economies, I calculated some estimates of share of intermediates trade and overall trade for the UNECE 17 program countries and the Russian Federation, which are quite illuminating. For 2020, for the year to date through August, we saw sharp declines in, of course, merchandise trade, and roughly equivalent decline in intermediate goods. on the export side for UNECE countries, and a similar story for the Russian Federation. What is interesting about this is intra-Russia and other transition economies trade in terms of BEC intermediate goods has declined, but it's only down 4.8%, whereas other trade in intermediate goods has declined more sharply, double-digit declines elsewhere. And the share of intermediate goods in trade between Russia and other transition economies has actually increased since 2017, from 72% to 75% in 2018, and currently at around 82%. And this is excluding fuels. This is intermediate goods trade as a share of total merchandise trade, excluding fuels, which are subject to strong price fluctuations. So this suggests that these countries are increasingly integrating their economies, and this can be a source of resilience in the recovery from the pandemic, because it allows countries to gives them some resilience as rather than depending on a small number of exports. Now, another interesting development during the crisis has been this tremendous growth in trade in medicines and medical equipment and personal protective equipment. This is an example of how trade can help the global economy respond to international shocks. And this is an example of why countries should continue to engage with the multilateral trading system to keep trade as free and open as possible. And I'll just move on to some consideration of implications for transition economies. The macroeconomic impact of COVID-19 is going to drive some changes in the composition of world trade, including shifts in trade balances. As countries have engaged in fiscal stimulus, those with less capacity to do so may end up with trade surpluses relative to, let's say, advanced economies in Western Europe and North America. And this might generate some friction in terms of concern about widening trade balances. We already see this with other countries, but this is something that we should keep an eye on and do our best to avoid a rise in protectionism as we exit the crisis. Trade should make transition economies more resilient as we exit the pandemic. And although it does expose them to potential external shocks, it also helps generate greater efficiencies and stronger long-run growth. And as engagement with the WTO, including a number of, there's a lot of activity going on at the WTO in terms of new negotiations. In recent years, we've had the Trade Facilitation Agreement, which was the first new trade agreement since the creation of the WTO. There are also plurilateral agreements and joint initiatives on micro, small, and medium-sized enterprises, e-commerce, and investment facilitation. And all of these should help, if these come to fruition, should help transition economies become less dependent on exports of primary products and fuels. And I think I'll just leave it at that. One note, this final slide shows where you can download WTO trade data, our trade forecasts, our trade barometers, which are a composite leading indicator for world trade, which combine information, high frequency data on things like export orders and container shipping and air freight into a composite indicator that gives us an early indication of the state of world trade. At the moment, the latest one in November showed a sharp rebound in merchandise trade, and we should expect that was hopefully will continue to provide an early indication of trade trends. The WTO also provides a wide range of data and other information on trade through its data portal at data.wto.org. And I'll just leave it at that.
Many thanks, Coleman, also to you for this very, very comprehensive presentation and the slides. You've nicely explained the trade forecast you were doing and flagged the minus 9.2 decline. You've talked about the rebound and also compared that scenario a little bit to the scenario after the financial crisis. Coleman, I really appreciated that you calculated for the purpose of our event here today, the data for the countries in the region and including the Russian Federation. And you nicely highlighted some of the interesting findings there, pointing to resilience in the region, maybe also pointing to the value of integration in the global economy and the multilateral trading system. And you flagged to us the benefits of multilateral trade cooperation, what can be helpful in terms of like rebooting the economy and moving towards a recovery. You've mentioned some of the key areas of work that are going on in the WTO, and I'm pleased to mention here that as part of UNECE's Economic Cooperation and Trade Division, we do have a quite strong work stream on trade facilitation. That's indeed a topic of great importance also to us. Now, with that, thanks to our three speakers, let us see whether technology is with us and whether we can have a quick look at what our audience had to say. There were three questions posed to the audience for each of the speakers. We had one question looking a little bit at FDI, and we asked you what policy measures you would suggest to counter the downward trend in FDI. And quite interesting to see that among our audience, the strongest reference here is for regional and international cooperation, followed by investment facilitation, and then on equal ranks, improving the investment climate, closely related, and facilitating public-private partnerships as well. Interesting to see that conclusion of international investment agreements ranks much further down in what is perceived as a useful policy measure for countering the downward trends in FDI. So thank you to our audience for engaging in that, and thank you to the GTP team for making that happen. I think we also have the results of a second question, which is about the policy options you would suggest to foster global value chain integration. And here we ask you to rank the options in terms of importance. Again, the options are connected and not necessarily mutually exclusive. But here we can see that investing in infrastructure and connectivity is one of the very, very important options considered. Again, a topic that we in UNECE's trade division are looking at, connectivity. Trade facilitation comes second, and third, regional cooperation. So I would say all those three topics are also on top of our work here in UNECE, and interesting what our audience had to say here. Now, I guess we also have question 3 coming in, indeed. So here it was about sectors. Which sectors were mostly affected by COVID-19 in your country? Here, not surprising, tourism. We all were faced with the various restrictions to travel and to our tourism engagement. So tourism sector and services sector, again, they relate to each other, are considered amongst those most severely affected. Raw materials, I understand, were considered to be less affected. And interesting to see here, results are still coming in. So I'm happy we could do that experimentation with the Mentimeter and in that way also engage our audience at least a little bit. Let me now move to the last part of our event. And let me turn to our commentators. We are extremely pleased to have 2 commentators with us. I realize we are a little bit tight in time, but I understand we have a little bit of flexibility at the end with expanding for a few minutes. And I'm very pleased to introduce to you now our 2 commentators, both of them from the Central Asian region. Let me start with Ms. Gulmira Kuzhagalieva from Kazakhstan. Gulmira is a senior expert at the Kaz Trade Center for Trade Policy Development under the Ministry of Trade and Integration in Kazakhstan. And in this capacity, Gulmira is also a state consultant on the country's membership in the WTO and the Eurasian Economic Union. And I understand, Gulmira, you are also working on Kazakhstan cooperation with the OECD. Gulmira, we are very happy to have you with us. The floor is yours.
Thank you very much, Elizabeth, distinguished speakers, dear participants, dear colleagues. Thank you for inviting me to this webinar and for giving me this opportunity to share my thoughts on implications of COVID-19 on transition economies of Central Asia, on actions taken and lessons learned, or maybe lessons that should be learned. In my short statement, I will focus more on my country, Kazakhstan, but I also want to cover like general trends in trade, value chains, and economic challenges in Central Asia in general. So since the beginning of spring, like all other countries in the world, Central Asian countries faced social and economic difficulties. And as a very diverse region, the effect of these problems and the response taken by governments was different from country to country. The impacts of COVID-19 pandemic with lockdowns and with disturbed global commodity prices was indeed notable for income and economies of our countries. As you know, several Central Asian countries rely heavily on migrant remittances, and lockdowns with closure of borders hit those migrant communities particularly hard. Another concurrent event that disturbed economic perspectives in the region is that since the beginning of the year, there have been several waves of falling oil and commodity prices on the world markets, which of course had its effect on commodity exporting countries like Kazakhstan. Of course, government measures taken in response to COVID-19, including healthcare measures, state policies on testing kits, financial and fiscal support of individuals and of SMEs, all these policies were again different from country to country and in many ways reflected the financial capabilities of governments. Some governments like Uzbekistan, Kyrgyzstan, and Kazakhstan were able to take steps and stimulate business and provide assistance to vulnerable groups. And in other countries, anti-crisis measures were quite limited. So what should be noted in general is that COVID crisis has just once again demonstrated how, in a way, fragile the economic stability is in our region due to some long-standing economic and social challenges, like, for example, underdevelopment of private sector, high levels of informal employment and informal entrepreneurship. And again, export basket of our countries is still considered quite under-diversified and dominated by extractive sector and products of extractive sector and crude oil. Of course, pandemic knows no borders, and all countries in the world, for all countries in the world, the crisis highlighted the needs for urgent actions. However, for many developing countries, sustainable long-term recovery will require a commitment to bridge capability gaps to set the stage for lasting recovery. Regarding regional trade and value chains, today all countries of Central Asia are active trade and economic partners of Kazakhstan. Our largest trade partner in the region is Uzbekistan, and we also see great potential in trade with Tajikistan and Kyrgyzstan, and with other Central Asian countries, of course. This year, due to the lockdown and due to the quarantine measures, we of course noticed decline in both export and imports in the region. I know that in the recent communique, leaders of G20 once again confirmed the importance of a multilateral trading system in the times of COVID crisis. And with all due respect to international trade institutions and to with adherence to our commitments to keep markets open for fair and stable trade and investment environment, I would say Kazakhstan is working a lot on regional integration right now. Trade integration at the regional level is a priority for us. With our partners in Central Asia, our goal is to deepen industrial cooperation and diversify the structure of our commodity flows. Of course, our joint task at these times is to collectively form the buffers of resilience to the current and possible future crisis with trading practices that would support sustainable development in general. And for example, to strengthen food security in our countries and build stable intra-regional food supply chains, Kazakhstan currently is creating a national network of wholesale distribution and agro-logistics centers for food items, fruits and vegetables. And we know that same systems are like Russia, Uzbekistan and Kyrgyzstan are also actively working on the creation of similar food and commodity distribution systems. And we do believe that integration of such centers into one network will ensure more broadly accessible and better quality food products on our markets. We are also actively promoting work on the implementation of the WTO trade facilitation agreement. Now in Kazakhstan, we do have a national committee for trade facilitation that is supervised by Deputy Prime Minister. So it is a pretty high level of supervision, and the committee includes representatives of both government and private sector. And last year, our government introduced a single window for export-import operations system to simplify trade procedures. And of course, at the level of Eurasian Economic Union, you probably already know, we revised the customs, the norms of our customs code. The main novelties of the code are accelerated release of goods and priority of electronics customs declaration. And in general, the Eurasian Economic Union countries are guided by the norms and principles of the WTO and do recognize the importance of all Eurasian states joining the organization. Regarding investments, I do believe that in Kazakhstan, we did a pretty good job in creating a good investment climate. I would say our legislation is fairly liberal for investment activities. However, what we notice is that the majority of our foreign direct investments is still focused on the extractive industries. It is still concentrated there. And another trend in recent years in the region is the flow of investments into the logistics sector with a focus on regional transport infrastructure and its integration into the global system. However, we also had extensive study by the OECD together with the International Transport Forum on connectivity in Central Asia, with focus on that was focused on analyzing challenges and problems with regards to physical transport infrastructure. And one of the main conclusions of the OECD and ITF was that the presence of a transit component in international infrastructure projects in Central Asia is always considered as an advantage. However, when prioritizing investment projects, it is recommended that our countries identify projects based on their focus on the development of intra-regional connectivity as well, not only transit through the region. And the countries are encouraged to take advantage of global infrastructure projects and make efforts to maximize the orientation of such projects, not only to attract transit traffic, but also to establish links between Central Asia and other markets. So we were strongly encouraged to revise our assessment methods so that trade and transport connectivity benefits becomes the main criteria for selecting investment projects. I think that's it. I will stop here from my side. That's it. And thank you again for this opportunity.
Thank you very much, Gulmira, for this very insightful remarks. And you've really nicely talked about what that means for the region and what that means for Kazakhstan. You've referred to the difference in policy responses in line with countries' capacities. You've also highlighted that maybe the current crisis mainly exposes pre-existing fragilities in the region, the underdevelopment of the private sector, the informality of the economy, and maybe the lack of diversification. And it was interesting to hear about the importance of the multilateral trading system as recognized by the G20 and the specific sectors you pointed out where regional integration can be particularly helpful. Food security and the agri-food sector was one, and trade facilitation, one important area of policy making as well. Last but not least, on the investment side, you flagged to us the importance of physical transport infrastructure. So thank you very much, Gulmira, for that. Before I turn to Aysilu, a quick comment to Coleman. Coleman, we have a question for you in the chat. Yes. Maybe you can have a look, and then I will give the floor to you after Aysilu for your answer, sure, if you can see the comment. Super. Now, let us hear from our last commentator. I'm very pleased to have with us Ms. Aysilu Mehmetkazieva. Aysilu is an independent international trade consultant, originally from the Kyrgyz Republic. And Aysilu, I understand at the moment you're based in South Africa. Prior to moving to South Africa, Aysilu worked for the WTO and for the Ministry of Economy in the Kyrgyz Republic. And you focused on issues such as negotiating free trade agreement and development and implementation of national export development strategy. You're also a fellow at the Asian Trade Center in Singapore. So Aysilu, it's great to have you with us and to hear from you your comments about how the trends in investment, trade, and global value chain play out in the region and in Kyrgyzstan. The floor is yours.
Thank you, Elizabeth. It's such a pleasure to be here today. And thanks to the speakers for such insightful presentations. And of course, thanks to UNECE and the Geneva Trade Platform for organizing this series of webinars. I actually attended one last week on promoting the circular economy in transition economies. And so I found it very informative and interesting. And thank you very much for facilitating these important debates, including in the context of Central Asian economies. So my brief intervention will be on Kyrgyzstan and my thoughts on potential solution for the post-COVID recovery. My country, Kyrgyzstan, being a small economy in transition, has been hit particularly hard by the COVID-19 crisis, like many other countries as well. And but unfortunately, even before the onset of the pandemic, the country was struggling to integrate properly into the global economy, including global value chains. And the challenges the country has faced and continues to face actually in this regards are numerous, from limited fiscal space to access to technology, to an underdeveloped private sector, as Gulmira mentioned in her intervention as well. So the pandemic has only further exacerbated these pre-existing challenges and exposed the economy's vulnerabilities, such as its significant reliance on remittances, as also was mentioned by other speakers. The effect of the lockdown and travel restrictions was particularly severe for the services sector, including tourism, restaurants, wholesale and retail trade, construction, beauty and transportation services, as actually the audience as well indicated in the survey. On the solution front, I would like, I think, to flag two potential areas that, in my view, present us with opportunities to pave the way to more resilient and inclusive growth, but which do not yet feature prominently enough in the policy agenda of the country and in the region as well, I think. And these are sustainability and digitalization. Recognizing the importance of the sustainability issue and given the potential of agricultural and tourism sectors in Kyrgyzstan, in the last few years, the government has been actually making efforts to encourage green tourism and exports of niche sustainable agricultural products. But many challenges in this area still remain, and there's still a lot to be done. But given the nature of this issue, I think the role of international, regional and international cooperation in this respect, and with regard to promoting sustainable trade in general, I think cannot be highlighted enough. Regionally, for example, it will be of paramount importance, for example, that the issue of sustainable trade is elevated to the level of the Eurasian Economic Union, of which Kyrgyzstan is also a member, especially given the fact that the Union has a common external trade policy. And a good example of international cooperation in this area, I think, is also the recently concluded negotiations between Kyrgyzstan and the European Union on the Enhanced Partnership and Cooperation Agreement. It is particularly important from the sustainability perspective because the agreement covers cooperation areas related to sustainable development in general, but also the intersection of trade and sustainable development in particular. And of course, the work of organizations such as UNECE in these areas, including, for example, the development of agricultural quality standards, is of particular relevance to economies such as Kyrgyzstan as they try to increase their participation in international trade. As for digitalization efforts, digitalization has proved to be a powerful ally in both the fight against the pandemic and managing its consequences. But at the same time, in Kyrgyzstan, it has accelerated the need to adopt digital solutions to sustain and further facilitate trade, including through the creation of an environment that is conducive to e-commerce development, for example. For quite some time now, the government, for instance, has been working on developing a draft law on e-commerce and e-commerce development program and action plan. So hopefully the government continues its push towards the enactment of this law and the implementation of this program, which will in turn hopefully enable and encourage the e-commerce in the country. So I think that's it for me, and I'll stop here, but any questions, comments, and thoughts would be welcome. Thank you very much again.
Many thanks, Ayselou, for that and for zooming into what all of this means for Kyrgyzstan. On 2 points, you flagged what earlier speakers have said, and I think these are very important messages. On the one hand, the huge implications for the services sector, and the fact that the current crisis really exposes some of the vulnerabilities in the region that have been pre-existing. And Ayselou, you nicely moved towards the solutions front, and you zoomed into 2 key topics, both of which also important for the work we are undertaking here in UNECE. Sustainability on the one hand, and I'm proud to say that we are also working with the countries in the region in the SPECA context on a project on SPECA principles for sustainable trade. And secondly, you flagged the importance of digitalization in the connection of trade facilitation and e-commerce, again, 2 very, very important areas of policymaking. So before we conclude and before we look at what our audience had to say on the last question, let me give here the floor to Coleman to see whether he can pick up the question that is in the chat. Coleman, I guess you have seen the question, and the floor is yours. Let us see whether Coleman can unmute himself.
Hello. Yes, I have seen the question, and I was trying to reply to it, but for some reason I can't click send. I would refer the questioner to the WTO's most recent Director General's monitoring report, which came out on Friday last week. It documents measures undertaken during the pandemic, and it distinguishes between measures countries have undertaken directly related to the COVID-19 and regular trade measures. It also documents it would document any actions taken in response to these. There have been more than, I did see that there are more than 1,000 support measures directly related to COVID-19 have been documented through mid-October, collectively worth several trillion US dollars. But my understanding is that some of these measures have been temporary in nature and may have been withdrawn. I can't, I don't have it on the top of my head, but I would refer the questioner to our monitoring report, and the information should be available there.
Many thanks, Coleman. And maybe for everybody to pick up on that, the question was about whether any countries had initiated WTO proceedings on violation of WTO rules in connection with the introduction of certain measures due to COVID-19. And many thanks for referring us to the source of answer for this question. And I guess all of this is still very timely with this most recent report having come out by WTO. Now, as we are concluding, we are running a tiny little bit late. Let us have a look at the last question that was posed to our audience. It's really a question about the way forward. And it was about what can be done to harness trade, investment, and global value chains for the Sustainable Development Goals. Several of our speakers have already referred to the importance of sustainability. And interesting to see what we have here. A global sustainability protocol will require some thinking and interpretation what can be done here. Very important areas of policy making seem to be coming up. Industrial policy, regionalism again, but also issues such as carbon policies, and I guess that links to our efforts to combat climate change, and sustainability criteria. So I would maybe wrap that up in terms of saying here there are several ideas. I guess many of the ideas will still remain to be fleshed out, and I would say it's a very important objective to see how we can really harness trade, investment, and global value chains for the Sustainable Development Goals, and also for circular economy. For us in UNECE, to transition to a more circular economy is one of the key topics we are working on and debating right now. I'm pleased to say that in April 2021, next year, our 69th session of the ECE Commission, that's our highest intergovernmental body, will be devoted to the topic of circular economy, the transition towards a circular economy. Now, and here maybe one point that was just also interestingly mentioned, connecting all of that to the supply chains, is the fact that diversity of sustainability criteria can be an important challenging factor here. So I guess one will have to look at this interplay between supply chains and sustainability criteria. I understand we have one more questions here in the chat room. Now, let me see whether we can take that question. And indeed, that question referred to this interaction about supply chains and sustainability criteria. Is there any of our speakers who would wish to respond or comment on that point? Let me see whether we can have some hands up here. If not, I would maybe conclude it here. And first of all, thank all our speakers and commentators for taking the time, for being with us, for preparing the presentations and sharing with us a very, very rich source of information, and also sharing with us the actual sources of this information, empowering us all to take this forward. We've gone over time, and I would say that indicates also the importance and the richness of the discussions we are having. And the COVID-19 crisis clearly has had a major impact on trade and foreign direct investment flows and the way how value chains operate. And we've seen that transition economies, including the ones in the UNECE region, were significantly affected by these trends. And I was very, very pleased that today we could zoom into a little bit what these trends really mean for UNECE 17 beneficiary countries and the Russian Federation. It's now important to turn these challenges into opportunities and to see what we can do to ensure a sustainable, resilient, and diversified economic recovery. And I was very pleased that several of our speakers gave us some thoughts on that, gave us some options, gave us some data, also pointed to some of the challenges in this regard. All of this clearly requires strategic thinking, sharing of experience, and international and regional cooperation. And I would say that today's experience sharing and discussion was a first step in this regard. And I'd like to reiterate that UNECE's Economic Cooperation and Trade Division stands ready to support these initiatives and to work with our partners and with our audience in terms of tackling these important challenges. Now, once again, thank you to all the speakers, to the audience, to our partners from the Geneva Trade Platform, and very importantly, also to the UNECE team. I would particularly wish to thank Ms. Nadezhda Sporozheva and Ms. Mariam Soumaré for contributing to the success of this event and also to the earlier similar events we were able to hold. With this, I thank you for your attention. I wish you a wonderful day and most importantly, stay safe.